Hello and welcome back to Kitco's Mining's Digging Deep with me, Paul Harris, in which we take a closer look at some of the most interesting and important news stories in the mining space this week. Joining me today is John Feneck, founder and CEO of the Feneck Commodities Report. John, welcome back to Kitco.
Thanks for having me, Paul. Pleasure.
Please note, Digging Deep is not investment advice, and the opinions expressed here are our own and not Kitco's. First off, I visited Lundin Gold's Fruta del Norte operation in Ecuador this week, and wow, production there could hit 500,000 ounces this year. The company has repaid all its debt. It has an industry-leading all-in sustaining cost margin of 58%. It paid $94 million in dividends to its shareholders last year, and it has the largest single-asset exploration program underway in Latin America. FDN will be producing for many more years than the original planned life of mine, and Lundin Gold has clearly knocked it out of the park. John, let's bring you in here. It seems that gold developers knocking it out of the park is the exception rather than the rule. Why do you think that is?
Yeah, well, that is fantastic news, and it is standout news, as you pointed out, because many development companies, once they get to a certain part of the Lassonde curve, get less interesting to the investing public, right? Because they are telegraphing through different reports that they issue that they are going to need X amount of years, really, not months, to get to production, right? And that is something that people will fade. Of course, when a company kind of telegraphs that, hey, we're not going to really be an exploration company anymore, we're not going to have these awesome drill results potentially, it goes into this, I wouldn't say hibernation phase, but it's just less interesting to people. But that's a mistake in a hot gold or silver or copper market, right? We're in that market right now. I wouldn't have said that, when we interviewed at VRIC together in January at all, but we're right there right now. So when you look at gold development stories, look at what happened with Treasury Metals just a few weeks ago. That's TSRMF. Jeremy's a really good leader. He's got a really good team built before the transaction. But now that they're going to merge with Black Wolf, basically Frank Guistra is coming into the mix. And when you get a strategic investor like that on board, I think it's very bullish. The stock has responded really well, and they raised some money on the back of that. So they're fully cashed up at this point. They had 3 million ounces going into the transaction of gold, Paul. So nice number, but now they've got even more gold, and they're picking up the cash balance that Black Wolf had, which I think was around $8 or $9 million. So, that is a positive transaction, in my opinion. And we own that stock in full disclosure. But we added to it on the news. We also like First Nordic, which is FNNCF, because when they did a transaction recently, it was sort of, a name change plus a transaction between two companies. And the market just seems to have missed it. They have 2.4 million ounces of gold in what I consider a very good jurisdiction in Sweden. They also have another deposit in Finland, not too far away. My thinking is because the Swedish deposit is teamed up with Agnico on a JV, that they're probably going to focus on that and do something with the Finnish assets. I mean, I can't be sure of that, but it just makes sense to focus on one or the other. And if you've got a great partner in AEM, why not do that? So when you look at that company, trading here at 16.5 cents US, it's like there's got to be a lot of upside in a name like that, in my opinion.
Okay, that's First Nordic Metals. We interviewed them at the Deutsche Goldmesse event. You can find that video on the Kitco Mining YouTube channel. The hibernation phase you mentioned, John, is euphemistically called by others the Valley of Death, the hibernation phase on the Lassonde curve. Bearing that in mind, are there particular things that you think investors should look out for, positive and negative, what's to be attracted to, what's to avoid when reviewing a gold developer story?
Sure. So, follow the public news and talk to the CEO directly like I do. I mean, if you don't have the time to talk to the CEO, then hire a service like ours to help you with that, because we're constantly in contact with CEOs. I met with, you and I were both at that energy transition conference in Washington, D.C., right? I had, 15 meetings in 2 days with CEOs. And when you get that kind of information, it really helps you make decisions because I know how to ask difficult questions as a former analyst. I'm not going to just throw them softballs and say, like, you have 3 million ounces of gold. What's the story here? I will ask someone like Jeremy at Treasury Metals, hey, tell me the path to production. Show it to me on paper. Put it on your presentation deck. Like, walk investors through this so they know what's happening. And I feel like a lot of companies don't do a good job of that. And that's really just unacceptable at this point, right? With gold breaking out, if you're a gold company, if you can't do it yourself, you have to hire a back office person to help you with your presentation deck and your fact sheet and all the things that clients look at, because it's relevant. I think what to look for in terms of green flags, it's adding investors like Treasury just did, using them as an example, like Frank Guistra, who's coming in to buy a lot of that float, right? Because pre-transaction, they were a little bit on the fence. They almost had about 30% locked up of the float. But if you don't have 30% locked up, in our opinion, you're eligible to be like a Marathon Gold and just get taken out. And that's not what investors are looking for. They're not looking for 20 to 30% gains and takeovers in this kind of a market. In my view, they're looking for doubles and triples. And how do they get there? Well, it's through this kind of situation, right? Where Frank brings in his followers and his clients, and now they're protected, right? They're not going to get taken over at this price.
One of the things you're talking about there with Frank Schuster, you're talking effectively about the network effect of having big names with long reach supporting a story. I imagine investors could just follow big names and in some ways copy what they do. Is that a good strategy, or is that also fraught with some risk?
There's definite risk there, because you don't know what Frank's timeline is, or Rick Rule's, or, you name your favorite, big shot in gold and silver. I would argue that I worked for Rick Rule for 2 years, and basically he would tell me, hey, John, I think uranium's going to do well, which he was absolutely right about. But it took, a few years for that to transpire, right? It took that time, where I think the average investor is going to bail between then and now, and they'll miss out on the upside. So I would just, caution that, when you have people that you follow that are extremely wealthy, they have a much longer time horizon than you do, and they don't need, liquidity, right? They have plenty of money, and you might not. So I always coach my clients on opportunity cost. How you've got $1 million to work with. How are you going to put that best to work? It doesn't mean that, we were just selling a copper stock, right, that we were up 500% on this year. It's like, not that I wanted to sell it. I know it's going higher, but I have to take gains in order to deploy that capital into other names that are just beaten up.
Knowing when to sell is often the hardest part, isn't it? Another gold developer you like is US Gold. They recently obtained the main environmental permit to develop the CK project in Wyoming. Its share price has been rising ever since. I sat down with CEO George B. in New York a couple of weeks ago for an update, and it all sounds very positive. And George has perhaps another element that people need to look out for. He's got a great deal of big company experience doing lots of good things. Is it all positive at CK, John, or are there still things to look out for?
It is all positive at this point, because they did something in Wyoming that no other gold junior that I'm aware of did recently, which is get their permitting. And that opens the door for not only gold and silver and copper in Wyoming, but to me, it opens the door for uranium and other commodities to, have fruitful discussions with government entities in that state. So I think, applaud George and his team for working as hard as they have. As a NASDAQ traded gold stock with about 11 million shares out, I honestly can't find another gold stock in my entire universe that we own or track that has that kind of a float, right? I mean, if you get a hotter gold market, which is hard to believe we're even saying that at 2,300 plus, but let's say 2,500 plus, a NASDAQ listed stock with a float like that is going to fly. So it's trading around 560, 570 right now. It hit $7, Paul, last week. I mean, this thing has a lot of potential. And I actually was on site three summers ago to look at this. So I've been in the stock quite some time, in full disclosure. It hasn't gone as well as I would have hoped. The permitting process is difficult in the States. It's difficult everywhere, right? So it just takes longer to get to where you want to be. But I think the upside that investors are missing here is twofold. One, George used to work, as you said, at much more difficult jurisdictions. mostly in South America for large companies like Barrick, right? He knows how to do his job well, and he is a mine builder. And so when you're betting against that, I would take the other side of the trade and go long U.S. gold here as opposed to short it, which I think it is getting shorted from time to time, being on the NASDAQ. Secondly, they have a ton of waste rock, as we call it, but also it's about 30 million tons, if I remember correctly. And when you look at current prices, it's about 18 to 20 bucks a ton, right? So if you have 30 million tons, multiply it by $10 a ton, even you're talking $300 million that is potential there to fund the project, right? So like when you look at their CapEx, to me, it's always been, hey, in a couple of years when this thing actually gets built, they may figure out a way to access that waste rock. I don't know if you knew this, but they're 3 miles from Martin Marietta, which is a huge commodities player, right? So like they're right near the highway there. They've got good infrastructure, and I like the stock a lot.
So that's basically monetizing their waste as construction aggregate.
Exactly.
Okay, let's take a step back in the process and talk about when companies put out economic studies like feasibilities, pre-feasibility studies. You touched on this in your comments earlier, John. It seems that they almost always disappoint the market. A very recent example of that is Troilus Gold, for example. They got creamed earlier this month when they put out their feasibility on their Troilus project in Quebec in Canada. John, does the market always have unreasonably high expectations of these things? Or is it the case that projects, companies are just not delivering?
That's a great question. And I think that it's not always at the company level in terms of not delivering. I think that costs have gone up exponentially since COVID. And that is being reflected in something like a PFS, a pre-feasibility study now, right? And if your metrics aren't going to exceed the costs, then you're in trouble in terms of putting that PFS out to the public, because smart people will look at this and say, okay, your CapEx 3 years ago was 150 million. Now it's 250 million. Where is a junior trading with at 20 cents getting another 100 million bucks, right?
Okay, let's talk about money. And I'm going to throw quiz time at you, John. You haven't prepared for this. You don't know this is coming, so I apologize for that in advance. Hopefully you can roll with it. Quote a popular social meme, F around and find out. How many international arbitration processes does Panama face for shutting down the Copy Panama mine last year? What's your guess?
Wow. How many arbitrations or lawsuits?
Yeah.
Let's say 60.
Oh, you're out by a factor of 10. There's 6 international arbitration cases that have been opened against Panama. Okay, question, the second part of the question. What do you estimate the aggregate amount of damages sought is? What number would you put on that?
Wow. Well, if it's only 6 entities, if you're adding up all of what they're seeking, it's probably 1 to 2 billion.
Oh, you're off by a big factor there. 56.6 billion.
Yeah, see, this is a story that I need to get up to speed on. I don't own FNV, Franco-Nevada, which had a large position there. And thankfully, we do a good job of avoiding certain things. And that was a debacle. In fact, when you and I interviewed, a couple months ago, I did say that no one's going to invest in Panama again. And I feel stronger after hearing these numbers.
Put that into some context, that 56 billion is about 3/4 of the country's GDP. Franco-Nevada, who you mentioned, they're seeking 5 billion. Okay, let's talk about some perhaps more positive money numbers. Another bought deal this week, Gold Royalty raised $34.5 million US. That's to partially fund the 50 million acquisition of a copper stream on the Adriatic Metals Barrios Silver project in Bosnia and Herzegovina. Kinolan Minerals raised 9.86 million by a strategic investment from Centera Gold. That's for a 9.9% stake. Kenora is exploring in various provinces in Canada. John, financing activity seems to have picked up, and with more bought deal activity and more strategic activity, it seems that bog standard private placements are still a bit thin, though. What are your thoughts and observations?
I think that there is a better environment here since, call it mid-March. I remember having dinner with Jose Garcia, the CEO of SilverX in PDAC, right, the first night. And shortly after that, they launched a financing. And it took him probably like 2 weeks to raise maybe like 2 million. And then all of a sudden, in the last 2 days, they raised 3 more million. So they upsized their financing to 5 million. And that was before silver really broke out. Look at Faraday. You and I talked about them on our last interview on this channel. They just raised 23 million bucks, I think this week. And I remember talking to Gianni Kovacevic back in January of 2021, so 3.5 years ago, and he was doing $1 million raise. Okay, and that took a while, and that just shows you that certain areas of the commodity world are able to raise money more effectively now. That is a copper company. The previous one, obviously, precious metals. But there's, I feel, a lot of interest in those areas along with uranium. Like, look at uranium. There's no problem, even for some of these juniors, in raising money since last fall.
In Faraday, you've also got the network effect at work there, the Lundin family behind that as well. You mentioned silver. Let's talk a little about silver. The silver price lagged the move higher in the gold price for a long time, but recently it started to make its move, hitting and exceeding $30 per ounce, that price point. Why is $30 per ounce significant, and how significant is it?
Sure. So we were interviewing with you and on all shows last year saying 26 would be extremely problematic per ounce. And this, while silver was our largest holding all of last year, by the way, we just felt that it was going to be a problem, and it was a problem. Once it got through 26 this year, Paul, with authority, by the way, we immediately emailed our followers and said, this brings in a test of 30, because 30 was major resistance going back to 2013. Interestingly, on May 13th, I think it was, whatever that Friday was here just a few weeks ago, it might have been the 17th, we broke through that $30 region like butter. And it hasn't closed below 30 since, which is really the takeaway, right? When you have a major resistance level taken out, it's not atypical for you to break through that region again. And we were saying that a test of 29 wouldn't surprise us, but we held 30 when it recently dipped down to 30 to test that area and rallied back to 3150 plus. So the action in silver right now is fantastic. It's really much more fantastic for silver companies. And we can talk about that a little bit if you'd like.
Well, but yes, before we do, though, can we expect more from the silver price? What do you think is the next resistance level going up?
Sure. It's been bumping up on 33. I think 33 to 34 is sort of at your next level. 35 is the big number in the sand. Once we get through 35 on a few closes, it's go time, because there's not a lot of resistance from 35 to 50, frankly. And we've only touched 50 twice in history.
Okay, now the leverage in silver stocks can be insane. Are still silver stocks starting to heat up?
Absolutely. A lot of the names we follow, Aftermath Silver, AAGFF, Guanajuato Silver, GSVRF, I mentioned SilverX, all of those are up, probably 100% from our last visit with you. And this is just from silver going from 25, let's call it, to 30. Maybe 31. So imagine if we go from 31 to 35, and what does that mean for smaller silver companies that are either producers or developers? Even the Explorcos are starting to get a bid. So we think that you're out of the woods in silver stocks, yet many of them still are trading like they're going out of business. And so this is the time to do the homework and align yourself with someone like myself or another professional to help, identify what silver companies have ounces in the ground and what their game plan looks like going forward.
I know one impact of the silver price going to $35, it means we won't be able to get John Feneck on Digging Deep again, because you'll be in a yacht somewhere sailing around the Bahamas. Okay, why do silver stocks have such insane leverage to the silver price?
Well, it's true of gold as well, but this is just my thinking, Paul. But I think that what you had mentioned about costs going up has detracted some investment from our sector, right? There's been a lot of names that have surprised people to the downside in terms of capex increases. And I think when you combine that with the tech, AI, Bitcoin kind of momentum crowd just doing extremely well in 2024, it's an opportunity for investors in our sector because there's distractions everywhere, right? So I think once that distraction, factor goes away, which I'm thinking sometime between September and November, we will get a broad market pullback. That's when I think our sector can really shine. To answer your question, the leverage that is inherent out there is really for producers, right? So if you look at something like Silvercrest, SILV, that's around like $8.90 a share right now. It's had a huge move off the base because they're a producing silver company, right? And Chris and his team do a really good job of managing the asset as well as expectations, I think. That company has thrived. If you look at the gold side, Alamos, AGI, McEwen, which is gold, copper, MUX, these charts look amazing. So there's I think you have to, as an investor, look at the asset allocation that you have in place and make sure you have some producers in your mix, because the ones that are producing will have the most leverage to a move here in silver or gold.
Okay, let's take a little bit of a sidestep. There's a number of voices in the silver community that believe it should be considered a critical mineral or critical metal through its use in solar and other applications. A lot of people view silver as an industrial metal rather than a monetary metal. But on the critical minerals front, the US government imposed a lot of tariffs on material or products out of China this past week. What's going on there, John?
Yeah, so to just answer your first question there about silver, we do see it as a precious metal, not just an industrial metal. And I know that is a different opinion than most, but just look at what's happened here with gold and silver in terms of the gold to silver ratio. It should tell you something. It was around 90 here just 2 months ago, and now it's in the 70s. And that's silver as a precious metal catching up to gold's run, which is very bullish. To answer what's happening with the China situation, there was tariffs placed on certain commodities. Like, for example, the U.S. had no tariffs with regards to manganese, cobalt, zinc, and tungsten. All of that changed recently to now where, as of August 1st, there's going to be 25% tariffs levied on those 4 commodities. And there's others on the list, but I'm just using those as an example. And I think that caught a lot of people by surprise, not you and I, because we go to these conferences and we're talking to CEOs regularly. But when you look at that, I mentioned Aftermath Silver. They have fantastic news February 29th on identifying a lot of manganese in their deposits in Chile and Peru. And if you look at that news release, it's 99.9% battery grade. That's the kind of news you want to see. The stock has barely responded since that's come out in 3 months later here, which is just unbelievable to me. But now 91% of manganese is produced in China, correct? So people are starting to realize we need this, and the US government is telling you that we need this in so many words. When you go down that list, tungsten is something also that I've been heavily investing in the last 12 months because I got to better know that tungsten, again, like manganese, is heavily produced in China. In fact, we produced no tungsten at all in the U.S. last year. So one in particular, Golden Metal Resources, GMTLF, is in Nevada, okay? And they have put out fantastic news January, February, March. They took in some money from a billionaire recently who gave them a little bit of cash. But a company like that, given this news from the U.S. government, is in line to receive some money, I think. And I think Fireweed also, Fireweed Metals, FWEDF, is also there. However, when you look at their market caps, as a value investor, we're looking at this kind of stuff, not just who's going to get DoD money, but what is the market cap of that company and how meaningful would that money be, right? Golden Metal is, let's say, a $15 million cap. You get a $10 million grant you're off to the races. And then you're going to get analyst coverage and all the rest, right? In fact, I just mentioned this as an aside, Paul, because it is relevant to our conversation here. First Tellurium, FSTTF, I'm not sure if you met them in DC, but they just got 29 million US yesterday as a 5.5 million US market cap company. I mean, the stock's barely moved. And that's the beauty of our sector, is that people don't follow juniors very closely. And they kind of wait for things to move, I think, and wait for analysts to get on board. And that's a mistake. You want to be able to look at these press releases and identify when good events happen.
Okay, now you're based in Arizona, John. The US has a presidential election coming. If Biden wins, presumably it will be a continuation of the same policies. If Trump wins, he has a different view of the energy transition and things like that. But he's in the past, when he was president, he showed he was sort of pro-mining and wanted to support natural resource development. What do you think will happen following the election?
Wow, that is the $64,000 question, Paul. But I think that this all happening under Biden, who is obviously a Democrat and viewed as more of a liberal, is extremely bullish for our sector, right? Because I think Trump is going to be much more supportive, not a little more supportive of mining. Because look, I mean, he was in office years ago, right? Things have changed. He's going to come on board, I think, with this narrative, and anything anti-China, which this is, right? This news is not friendly to China, I think he would support. So I think Trump winning would only help our cause.
Okay, let's end up with some drill action. Copper X Resources announced their maiden drill results from its Exploradora Norte project in Chile this week, including 114 meters of 0.95 grams per ton gold. A good start there for Copper X, which is the latest addition to the Discovery Group stable. Collective Mining here in Colombia expanded its Apollo target in Caldas, drilling 513.7 meters, grading 2.2 grams per ton gold equivalent. That extended Apollo by 150 meters. Collective says it's looking to define a series of closely spaced porphyry and porphyry-related systems capable of producing at more than 400,000 ounces a year of gold equivalent. John, what stood out for you this week?
For me, there were two, one nickel/copper and the other copper. So Power Nickel, which is PNPNF. I presented with Terry Lynch, the CEO, at the conference you and I both attended 4 weeks ago, and learned a lot more about what Terry's plans are for this year. They put out some massive copper hits, 9.5% copper to be exact, just a week ago. And the stock has really responded, meaning that when we were presenting together, I think the stock was around 27, 28 cents US. It's trading at 48 now. I think there's additional upside here on the back of that news, because he's not done yet. He's got other holes to put out. So I think the shorts are going to get squeezed here in this one in June. And we're already seeing some of that on the chart. The other one would be 4N Mining, which I believe is FMCXF. They're a larger cap copper play. And they put out some really good news at Tesla. They put out 7 new holes actually here over the last week. And that stock is in a serious uptrend. You know, it's $200 million they pulled in December, not a small number for any mining company, right? So they have backing from larger entities, and we like that.
Excellent. Well, some good results there all round. John, thank you very much for joining us this week.
Of course, Paul. Thank you.
And that's all from Digging Deep this week. I'm Paul Harris, and this is Kitco Mining.